Let's take a look at some charts on ChainLink for this week's article on Brave New Coin. So ChainLink is a decentralized Oracle network allowing for interoperability between crypto to crypto, crypto to non-crypto. It's basically the rails to bring information together. You can see they have several partnerships: Google, Oracle, Intel, big names in tech, as well as BNC. Hey, that's us. So in general, to me, Binance, partnerships are less important than actual working use cases, which they have for ChainLink. Many of the oracles, the price oracles for Ethereum, as well as other currency pairs, are active and being used by the DeFi ecosystem. So in that regard, ChainLink is extremely important for interoperability between all of the DeFi products and exchanges. CoinGecko. This is just an example of the Ethereum price oracle. So in general, it pings, ChainLink will ping a bunch of different data providers for price and aggregate that data into one value. Now really the only thing I personally don't like with Link, kind of two things. One being the circulating supply is, so they minted 1 billion, the circulating supply is 379 million. The parent company still owns 270 million. Now it looks like they've been selling around 500,000 tokens every 2 weeks pretty regularly. That isn't going to make or break the market. Clearly they need development funds covered, they need overhead costs covered, that sort of thing. I haven't seen this. It may exist, some sort of quarterly report on holdings and direction of the company, that sort of thing. Similar to Ripple, similar to Stellar. Anybody who holds a lot of money for a coin or in a coin generally puts out some sort of quarterly report. You can see that the node operator rewards haven't been distributed yet. I don't know when that's going to start. From what I can gather, it's similar to a proof of stake type situation where these node operators are rewarded for propagating data on the network, trustful data. Looking at some of these node operators, which continue to increase in number since May last year. Various exchanges, various DEX products, price oracles, that sort of thing. So in the future, you always want to see this grow. You never want to see this decline. Any demand in nodes, oracles, DEXs, DeFi, all of that should benefit Link, because Link is used, at least partially, for many of the price data available. All right, let's look at some on-chain stats for the token itself. You can see ever since May, transactions per day has really taken off. Similar to the node operators coming online, it kind of mirrors that in that as more node operators are coming online, you're getting more transactions per day. You can see transactions per day broke 7,000 in March and dropped with price and rose back up again. In general, when I see something like that, it doesn't necessarily look organic, in that you should see, month over month rises. You shouldn't see a 1 week decline of greater than 50% if there's not some weirdness going on here. So it's come back to sort of an equilibrium between the high and the low. So together this looks to me that it's more price related, more speculation related than necessarily like the use case for Link, which is fine. Many coins have on-chain data that mirrors the price. If price goes up, on-chain data will spike. Looking at average transaction values in the fill here, nothing really remarkable, just sort of sideways ranging, which is fine. I expect that as transactions increase, average transaction values will remain sideways and necessarily won't necessarily increase. Looking at NVT, which is the line here, inverse metric of economic utility, and daily active addresses. So when I see NVT at lows and daily active addresses at all-time highs, that's extremely bullish for anything in a vacuum. It says people are using the coin. It says there's economic utility on chain, which is certainly the case with transactions per day hitting all-time highs and trying to return to all-time highs. Daily active addresses just says at the bare minimum there's something going on here on chain. So it's breaching 3K again, back to all-time highs. NVT rising slightly but falling since March, since that price drop obviously. So if NVT can continue to fall and daily active addresses continue to rise, I expect the link price to hit new all-time highs. It's just that simple, really. And I expect transactions per day to keep rising, mainly due to speculative demand. Looking at the GitHub for the main repo, it's one of the more active repos in all of crypto, really. There's over 4,000 commits here in the past year, which is a lot. Now, commits aren't necessarily, not every commit is a quality commit, and it's hard to like curate, this was an edit that was valuable, this was an edit that wasn't valuable. But in general, it just means there's a lot of development work being done in GitHub. Not anything alone that's going to make or break a coin, but it's important to see an extremely popular coin have development behind it. If it's something like Litecoin, where there's no development arguably in the GitHub, bit of an issue, bit of a divergence from bullishness at least. All right, let's look at technicals. We have yearly pivots, VPVR, volume profile of the visible range, the 50 and the 200 EMA, volume, and RSI. So in general, the ChainLink reach an all-time high, reach a range low with a 70% decline, and then return back up to basically previous all-time high. You can't not be bullish at that. You've got a 50-200 cross here. What I'd like to see is consolidation around 420, blaze it somewhere around there, with the next price target around 650. You can see there's no price volume resistance up here, just because there's been very little price history. Now it had this nice M double top, broke down, just happened to coincide with the rest of the market. So overall, there's been just very little, price activity above 420. We are seeing rising prices on declining volume, which isn't necessarily bullish. Another reason why I'd like this to consolidate a little bit more. There's possibly a white coffee and distribution schematic going on here. We have like a failed rally and then more failed new highs, essentially breaking back down to range. So if this does break back down to lows, it would break the ice, is what the Wyckoff people call it. So anything below 160 again would likely be back into the dollar territory. Certainly not something I expect right now. Massive support at 227 based on volume. RSI, nothing really to comment on. Again, a bit of a bearish divergence with rising. Anytime you see a rising price, falling volume, falling momentum indicators, that says that oomph in bullishness is declining. Looking at the cloud, if it's above the cloud, it's bullish. If it's below the cloud, it's bearish. You can see it had this nice Adam Eve breakout back above the cloud now. Large support at 318, 320, which is the cloud and the Kijun. You can see there's definitely a TKC clamp here in that the Tenkan and the Kijun lines are spreading apart and have flattened, which says price is more likely to return to the Kijun than it is to continue to higher highs. Again, speaking to the need for some consolidation here before new highs. If we look at Link BTC with a pitchfork, which is this trend channel here, yearly pivots, VPVR, RSI, 200 EMA. First thing that immediately pops out to me is the strength that this has had at the 200 EMA since early 2019. It broke above and it's just been nothing but bullishness since May. Again, mirroring these on-chain statistics, which is one reason why I talk about on-chain stuff a lot. Any activity on-chain, more so than usual, should be bullish for price. It goes hand in hand, but if you're seeing on-chain activity, usually very bullish. So you're seeing that uptick in May, and then, it's just been off to the races since then. It's held the 200 every test it's had since May 2019. Looking at the pitchfork, so it's got 3 anchor points, and you project this trend channel. So this is a bullish pitchfork. It's pointing upward. The yellow line here is the median line. So the general rule is price is expected to return to that median line over and over and over and over again, which it has several times, perhaps more than 10 here. With this green zone being the most likely path for the trend, so long as it remains inside the pitchfork. So if we break below 24,000 sats, for instance, I'd expect it to cancel the trend. It would break below this yearly pivot out of this pitchfork. So these extra wings I've added, this purple, fuchsia, maroon, magenta, whatever, are cautionary reversal zones. So you can see it got rejected here at the highs. If it gets up in, 90,000 zone, that'll again be a likely rejection. If it gets below the 200 even, the pitchfork projects support there. That isn't necessarily always the case, but you can see if it resistance up here, it should be support down here. And RSI, nothing really to comment on. It's certainly below 50. Momentum came way down. Swung bearish, definitely. Back at kind of the previous lows here. And as far as yearly pivots are concerned to the upside, it likes 70,000, something like that, in September this year, just based on the pitchfork plus yearly pivots. Then if we look at Link ETH, which is an unusual pair that not too many people comment on, at least that I see, but it's always good to look at these unusual pairs just to see if there's anything that can be gleaned from them. So again, you see this extremely strong bullish trend bouncing every time on the 200 since even July 2018. So upside would be the yearly pivot around 0.25. Downside, virtually no volume support, probably because this is just a thinly traded pair overall. But 0.01 would be a support. 0.005 would be a support. But that would break this extremely strong multi-year bull trend at this point. So it's hard to find bearish aspects for Link right now. As much as I try, everything I can look at, on-chain, fundamentals, technicals, all extremely bullish.